So today I'm going to talk about this one ETF or closed-end fund, which is I'm crowning one of the reliable income fund out there in Canada as of today, because of its history. And the reason I crown this is because of its past history. If it's your first time, just make sure you subscribe because on this channel I talk about these income funds and anything related to your income investing and passive income. And also, we also talk about growth investing sometimes. So let's go. Canoe, this fund is Canoe Financial. That's the company that manages a particular ETF. Canoe EIT Income Fund, one of Canada's largest closed-end investment funds, designed to maximize monthly distribution and capital appreciation by investing in a broadly diversified portfolio of high-quality securities or stocks. Total asset at this moment is 2.3 billion. We look at inception date was August 7, 1997. We look at that was it. We look at a fund highlights. If we look at fund highlights, it's one of Canada's largest closed-end fund, income-oriented, active managed, total return fund. So it does have is active managed, low management fee of 1% or 1.1, and monthly distribution of 10 cents per share. Right, current yield as of today is 10%. Annual redemption feature is about 10% of outstanding unit at 95% of NAV. So just in case if the fund has to be closed or something like that, that's a redemption you're gonna get. We'll look at the investment approach of this fund particularly. So it's active managed, as we've said, a portfolio of quality franchised, stable business and long-term sustainable growth companies, diversify across sectors and market capitalization. So they don't only invest in one type of stocks, but different sectors. Risk management, so they ensure the best reward idea for conviction levels are appropriate, reflected in position weight. So whenever they weight, they have to weight to manage the risk. And disciplined bottom-up investment process. That's it is. When we look at, so let's look at down here a little bit. So if you look at that's a fund portfolio. Let's look at date and price. We'll look at the price today. Record. So they're going to pay dividend actually soon, which is record date. You have to invest before May 22. Ex distribution date will be May 12. May 18. Payment will be June 14 because they pay monthly. So if you about June 15, so every 15, between 15 and 13, depends on the date that follows, but between that's a day they usually pay. We look at tickers. The ticker symbol that it traded under is EIT.UN. That's a regular share that we are actually talking about. I mean, the other ones are more of a preferred share. We're not talking about we're not focusing on those for today. We look at the price is $12.95, and NAV you can see is $12.93. So it's a pretty good to it. It's a pretty closer to its NAV or net asset value. It's about 12. So that 2 cents difference, of course, is a your MER or management fee you're gonna pay. So it pays 1%. In management fee, so it's a little bit higher compared to other ETFs we always talk about, like HMAX, like HYLD. We'll look at the performance, annual compound return. So in 10 years, has returned about 10.9% annually. When you look at since inception, has returned about 9.5%. It has beaten up the index, Canadian index TSX Composite. It has returned only about 7%. This fund has returned about 9.5%. So it's a pretty good. It does really well than the market, Canadian market in general. We'll look at the growth of $10,000. How do you invest $10,000 in 1998 or when it was incepted? End of 1997. At this time, you would have or closer to 120. That's just 10,000 and reinvest the dividend without having to put any other money. That's pretty good still. It was about 20 years, but you didn't put any money and you just reinvest all those dividends. That will be a pretty good return. We'll look at the portfolio review. top 25 holdings. We look at the number one, of course, Royal Bank of Canada, Philip Morris. So not only it does invest in, it's a Canadian fund, but it does not invest only in Canadian stocks. This fund, the beauty about this stock, has diversified across sectors and also geography, mainly US and Canada. We look at our resources. We look at the company that most popular. We know Canadian Pacific Railway. We look at CVS Health. We know that one. Canadian Natural Resources. We look at the Berkshire Hathaway, General Electric, Topaz. Some of these are European companies. But we look at the Rogers Communication, Caterpillar, Toronto Dominion Bank, Berry Gold. So it has invested in really great, good companies. Those are top 25, which are all really good companies. We look at the sector that this fund has invested. We look at the financial as about 25%. Energy is about 16.9%. Healthcare is 15%. Material is 13%. Industrial is 4%. Consumer services 7.9%. 7.4%. Consumer production. So a consumer product and communication services to technology is almost zero. Why they didn't put technology here is because this is not a growth fund. This is more of a dividend income. So technology, as we know, most technology companies like Google, Amazon, Facebook, they don't pay dividend. So they focus more on financials because financial pay a lot of dividends. I mean, I'm not sure why they have Berkshire Hathaway there, but yeah, maybe for little growth. Berkshire does not pay dividend. We can see there's a Berkshire Hathaway right here. But most of these companies they invest in, they do pay dividends. So they use those dividends and other other strategy to make sure that you get the 10% dividend. We look at the asset mix. We look at Canada is about 53% constitute Canada and 46% is the US. So mainly this fund is invested in Canada and the US, but has a little bit of international, about 3%, and a little bit of fixed income, pretty much is zero. So international is about only 3%. So we can only say half Canada, half US, pretty much. That's it. So why am I crowning this as the top most reliable fund, income fund in Canada? Here is why. Check this out. Look at this fund. I just put the date here, 1996 up to now, 20 as of May. So since it was incepted, look at these dates. Since it was incepted, when they start paying dividend, these are like a long history. I'm crowning this as the most reliable. September 30th, 1997. 1997, they start paying dividend. From there on, they never cut their dividend. They've always paid monthly since 1997, September 30th. So it's been so many years, man, like dinosaur age. Like, that's how reliable this company is. Look at that. I just went through this. Look at that, man. Like, they have never cut dividend. They've been paying since all through the session of 2000, market crash of 2000, market crash of 2008. They've been paying straight up. So the point I'm making this video is this: if you really want to passive income and you want to invest in a company that is more reliable, 100% reliable, that pay dividend and have a little bit of growth, I think Canoe EIT is a fund for you. The downside is it only pay 10%. So 10% of dividend. I mean, it's not as bad, but you're not going to get like a 14, 13 like other funds. Right now they pay about 14 to 15%. So, and if you go to fund like a Tesla fund, it pays about 50%. That's a US one. In Canada also there's one pays 20%. So if you want to go to those, I mean, it's all good. But if you want a reliable and really, really solid and has a long history, I think Canoe Income Fund is the fund for you. And that's all I want to talk about today. Again, if it's your first time, if you like my content, please like. And if you haven't subscribed, just make sure you subscribe, because on this channel, I talk about this type of funds and news and update, anything like that. So thank you for watching. Bye-bye.